All right, hello, I'm Kate Stalter. It is January 8th, 2021, and I want to show you today another Chinese electric vehicle manufacturer. I wrote about these for Forbes the other day, and I'll put the link to the Forbes article in the notes below. So this is Li Auto, and let me go over here to a 5-minute chart and just kind of show you. You see there, it's kind of bouncing around a little bit today between a big gap up. Now it's closed that gap and is currently down, appears to be just maybe a little lower, or maybe, yeah, a little lower from where it ended the prior session. So we'll see. It does seem to be bouncing around. There does seem to be a little volatility of trade today. Now, as I mentioned in my video a couple days ago when I highlighted another company, NIO, China is implementing some measures to get away from fossil fuels. So, this is happening in the U.S. will probably begin to happen even more in the U.S. with the Biden administration coming in, but it's happening globally. So there really is potential for these vehicles and the products that go along with them, like the batteries and so forth. So you did see a nice gain here Thursday as well. Now, it's not always clear why stocks move sharply either up or down. I know it's really tempting. We want to have a why. Not always the case that you have that, but in this one we do. And let me take a look at this. So Bank of America, and I put this in the Forbes article, a couple days ago they initiated coverage with a buy rating and a price target of 42. And the analyst wrote that he expects sales to grow 48% per year from now through 2025 as electric vehicles gain share in China's auto market for premium for electric models continues to be robust, okay? Or actually, let me read that again. Demand for premium electric models continues to be robust. So you see that strong demand coming up. The company is expected to launch one new model per year between 2022 and 2024. Currently, it has one model, the Li 1. Looks pretty nice. It's an upscale, mid-size electric SUV with a gas-powered range extender, which is really an onboard generator. And that's made it popular in parts of China where the vehicle chargers are still few and far between. And then there was some more news that drove this stock higher in the last few sessions as well, which is that Credit Suisse raised its rating to outperform from neutral, boosted its price target from 33 to 40. Now, I don't take too much stock in these price targets, and neither should you when the investment banks put these in. Those are really notes more for institutional clients, and retail clients should not put too much worry into that. Now, Credit Suisse, though, did say that the company's sales momentum appears better than expected, and it has a clear and ambitious plan to keep its advanced driver assist systems competitive in this market. So let's go over to the weekly chart, and we can take a look at some of these sales over here. Now, I'm really impressed with this. You see the sales acceleration in the past 3 quarters here. So it started over here with 40.8 million and then rose up here to 396.7 in the most recently reported quarter. And it does report the December quarter and 2020 full year on February 12th. And the reason I like to tell people that is in case you're thinking about buying, which I'm not recommending, I'm just saying, in case you are thinking about a buy or a hold, you've always got to know when earnings come in. Because there could be something, anything, just a little sentence in the release that causes the institutional buyers to say, oh, wait a second, we got to get out of this one. So just be careful. Just be careful. On the earnings, this is very interesting. You see the company has not been profitable, but analysts are now expecting a penny per share profit for the full year 2021. And you see the little green arrow there, that's an upward revision. So that's pretty good news. You see this is a recent IPO, which I personally always like those because it does bode well, potentially, for more growth in the coming years. So that's a look at this one. Before I wrap up, Let me also show you the pattern that's forming here. This is a cup-shaped pattern here on the weekly chart. You can see it fairly clearly. Let me go back to a daily and we can take a look. Even a better view on here. So you see the high, the structure high was 47.70. Now, currently we've got a cup forming. If you were to see a cup with handle, you would want it to start forming in the upper half of that structure. Now, just eyeballing it does not look like that peak right there is in the upper half, but if you do the math, it actually is. Kind of right there, draw a line across. That makes it a little more clear. So you might see a handle form at this point. That would be an interesting thing to see. Maybe another downward slide that undercuts this previous structure low over here. You might have a double bottom. Too soon to say how this formation might play out. I would suggest just keeping an eye on this one at this point, waiting to see if there is further downside movement before you see a new uptick in heavy volume. That might be a better signal of some renewed institutional buying. All right, everybody, thanks so much for watching. See you next time.